All right. Hello, everyone, and welcome to our Wednesday at 1 p.m. Eastern Standard Time workshop. We're excited to have everyone back. We survived Hurricane Ian. A few of us did have damage, but we're happy to be back in the office and running our workshop. So today, our guest speaker is Zachary Winner. He is the managing principal of Cornerstone Investments LLC. If you don't know him, he's got extensive experience in multifamily as well as Bitcoin mining. So if that interests you, this is going to be a great workshop for you to watch. But before we do get started, a few things about NuView. We do not provide any legal or tax advice. We are a passive self-directed IRA custodian. What we are is similar to a Charles Schwab, Fidelity, Merrill Lynch, but our clients are able to invest outside of the stock market into alternative assets like real estate, cryptocurrency, precious metals, mortgage notes, anything like startup companies, pre-IPOs, and I'm going to go through a few more things in a minute. What is a self-directed IRA? So if you're new to self-directed IRAs, they've actually been around since the 1970s, but most people don't know that they can use a self-directed IRA to invest into these alternative assets. Now, it is just a marketing term, a self-directed IRA, but what it is it gives you the ability to choose your own investments, alternative type of assets that are brick and mortar tangible assets that you can see. So, what are the benefits of self direction? Well, it gives you diversification in your retirement portfolio. Like I like to tell all my clients, you don't want to put all your eggs in one basket. You want to diversify your portfolio. That gives you a better chance of succeeding, being able to retire wealthy. Not only that, you're making investments in a tax sheltered vehicle. It's either going to grow for you tax deferred or tax free. It just depends what type of IRA or some other type of plans that you might want to use, and you're investing in what you know best. A lot of our clients are already investing in real estate and cryptocurrency and things like that, but they're not doing it in an IRA. Once they learn about self-directed IRAs, they're like, why didn't I do this 10 years ago? I wish I would have known about this, but they've been around for a long time. So that's why we were bringing awareness to this vehicle for you to make your investments. So a few different plans that you're able to invest with. Most common is a traditional IRA. Most clients have left an employer at some point in time, and they might have an old 401k, 403b, TSP, some pre-tax type of an account. And if they want to move it to a self-directed IRA, more than likely they would be moving it to a traditional IRA. Then you have your Roth IRA. They are taxed a little bit differently. A traditional IRA is tax deferred. What that means is you don't pay the taxes until you take the money out of the retirement plan as a distribution after you retire after the age of 59 and a half. Then it's based on whatever your tax bracket is at that time. And that's the amount of taxes you pay on that amount of money. So it's tax deferred. The Roth IRA, it is taxed when you make the contributions or do what's called a Roth conversion, and then it grows tax exempt. And when you're ready to take those funds out or you leave it to your beneficiaries, they can take it out tax free. So would you rather pay your taxes on the seed or the crop? That's the difference between a traditional and a Roth IRA. The contribution limits are the same, $6,000 a year, with an additional $1,000 catch-up contribution if you're over the age of 50. Then you have employer plans. Anyone listening that's an entrepreneur, self-employed, they have their own business, then employer plans are something you might want to consider because they have higher contribution limits. A solo 401k, you can contribute up to $61,000 a year, same as a SEP IRA. The contributions are a little bit different. They're based on how much you earn at the end of the year, and that determines if you can max out that contribution or not. The solo QRP does have a $6,500 catch-up contribution if you're over the age of 50. The SEP IRA does not have a catch-up contribution. Solo QRP comes with some additional benefits because it's a 401k plan. You can take a loan against it. It's exempt from the UDFI tax if you're investing in anything that involves like leverage, or if you're taking a loan out on maybe a rental property or a mortgage, then it's exempt from that UDFI tax, which is unrelated debt financed income tax. The SEP IRA and the Simple IRA are great for small businesses. If you do have employees, you might want to consider the SEP or the Simple IRA. They do have a mandatory employee match. If you have a SEP IRA, if you contributed, say, 15% of your salary to the SEP IRA, then you also have to match that same percentage of your employee salaries to that SEP IRA for them. If you have no employees, then you don't have to worry about that. The Simple IRA comes with a mandatory 3% employee match. So that, something to consider when you have employees. It's a smaller contribution match, but it's a great way for them to have a retirement plan that they can invest into these alternative assets as well. And then a few other plans most people don't know they can self-direct are your education savings account, $2,000 contribution for that plan. And that is specifically for your kids or grandkids' education expenses. But you could partner that. $2,000 isn't a lot, but when you partner with some of the other plans that you might be eligible for, that's how you have buying power, and that's how that account can grow alongside with your IRAs. And then you have your health savings account. In order to be eligible for the health savings account, you must have a high deductible healthcare plan, and you can contribute for yourself if it's only yourself covered in that plan, or even if it's a family plan, you can contribute. The contribution limit, same thing. It's not too high right now. It's $36.50 for yourself, and then $7,300 for a family. But same thing, you can partner multiple plans together to make these investments, and that's how you can grow and build your wealth in multiple different vehicles. So there's also $1,000 catch-up contribution with your health savings account. Now this is specifically, it can be invested, but when you take the money out, it must be used for medical expenses, and that could be anything from over-the-counter prescriptions or medication, doctor's visits, surgeries, anything medical related, and it comes out tax-free. It's also tax deductible going in when you make those contributions. So it's a pretty cool plan to have. If you don't have one, you might want to discuss that next time you have open enrollment for your health. Whoever your health provider is, speak with them, see if they offer a health savings account option for you. So these are the most common investment options clients take advantage of. You have your private entities, which are like limited partnerships, joint ventures, syndications, LLCs, trusts, anything that's a private entity would fall under the private entities. Then you have your real estate. Real estate's a variety of things. It can be, smaller multifamily deals, foreclosures, tax liens, offshore real estate, condos, land, commercial property. And then cryptocurrency. We're seeing more and more clients jumping on the cryptocurrency train. There's Bitcoin, Ethereum, Litecoin, and there's quite a few other coins out there that are pretty exotic. And there's different ways you can hold that crypto in your IRA. Zach is going to cover some of those other options as far as the Bitcoin mining goes and investing in a private entity that can hold the crypto for you. And then you have your notes. So secured or unsecured notes, we can hold either one. Also convertible notes. So those are something to consider if you want to invest. It's basically you're lending the funds out to somebody else. And if it's secured, for example, there's real estate on the line. So either you get the real estate or you get whatever the terms of the note are, the interest. If it's unsecured, it's not secured by any assets. So that really is up to you to decide which avenue you want to invest in, what works for your portfolio, and how you want to invest. All right. So I'm real happy to bring Zach in. He's a great speaker. I've seen him speak personally. He is, like I said, the managing principal of Cornerstone Investments. He's got over 30 years experience in multifamily and over 5 years experience in Bitcoin mining. All right, Zach, I'm going to go ahead and let you take it over, and I'll meet you at the end for Q&A.
Great, Brian. Thanks very much. Happy to be here. Let me share my screen here. And let's do this. Can you see this screen now?
Yeah, you're good.
Perfect. Okay, well, let's get started. So today we're going to be talking about Cornerstone Investments Bitcoin Mining Fund. And we'll start with a brief discussion about what Bitcoin is. We'll get into some of the strengths of Bitcoin, and then we'll delve into what Bitcoin mining is and what its strengths are. And we'll follow that up with talking about some of the specifics about our Bitcoin mining fund and how you can passively invest in Bitcoin mining. Just a brief disclosure. Of course, we're not, none of this is investment advice. This is purely educational, and everybody should make an informed decision and do your own due diligence when making an investment decision. So what is Bitcoin? Well, first, it's a digital commodity. A lot of people refer to Bitcoin as digital gold, and it's got a very finite supply. That's something that's very unique with Bitcoin. There will only be 21 million Bitcoin that are ever produced, and we've already produced over 90% of Bitcoin. And all of the Bitcoin transactions are recorded on a distributed ledger called the blockchain. Now, what are some of the strengths of Bitcoin? Well, first, as I mentioned, it's got a known and fixed scarcity. The supply is capped at 21 million coins. We've already produced over 90%, and it will take over 118 years to produce the remaining less than 10% of the Bitcoin. So less than 2% of the Bitcoin supply is added to the market every year. If you compare that to gold, gold supply has historically increased about 2% a year. Now, every 4 years, the amount of new Bitcoin that's released to the market is cut in half. We call that the halving event. That happens every 4 years, I should say. So, about every 4 years, we have this halving event. So, right now, about every 10 minutes, 6.25 new Bitcoin is added to the marketplace. In 2024, that's going to be cut in half to 3.125 new Bitcoin added to the market. So we'll be adding less than 1% total Bitcoin to the market. And when you look at basic supply and demand dynamics and you look at the overall current amount of supply of something and the new supply that's added to the market every year, you can apply a model called a stock to flow model to that. This is a very common model. It's been applied to real estate, to gold, to silver, and other commodities. And so you could line out the current value and you can project forward where that commodity is going to go. Now, when we apply that stock to flow model to Bitcoin, you can see in the chart here, that's this blue trend line. And the actual price of Bitcoin is kind of this rainbow colored line here. And you can see over time, since Bitcoin was introduced about 13 years ago, it has fairly accurately tracked this stock to flow model. Now, if you look to the far right, the stock to flow model goes up until it exceeds $1 million. So, based off of this stock to flow model, a lot of people are projecting that eventually Bitcoin's value will exceed $1 million. Currently, it's trading at a little over $20,000. So, it's got a ways to go. But when you hear people talk about the price of Bitcoin eventually reaching $1 million, this is one of the bases for which they make that assertion. Now, one of the huge strengths of Bitcoin is its wide institutional adoption. And every few weeks, we hear about additional institutional adoption. Um, Goldman Sachs has said they're seeing huge institutional demand for Bitcoin with no signs of it abating. JP Morgan Chase conservatively estimates a $600 billion demand for Bitcoin. For example, Mass Mutual Life Insurance Company, a big insurance company that acquires lots of different investment assets and vehicles, recently invested $100 million in Bitcoin. And just in the last few months, both BlackRock and Fidelity Investments had announced that they're now opening up their investments to Bitcoin. So individual investors and managers of their funds are now able to add Bitcoin as an investment vehicle to their fund. And this is really a huge development. BlackRock and Fidelity combined have $14 trillion in assets under management. So if just 1% of that $14 trillion gets allocated to Bitcoin, that's another $140 billion in additional market demand. And so we're seeing this ongoing wider institutional adoption of investing in Bitcoin as a store of value. Each year, it just continues to grow and grow. Now, we're also seeing Bitcoin start to being used as a means of transferring funds and a means of paying for goods and services. So this year, Deloitte, a large accounting firm, did a survey that found that 85% of US merchants felt that accepting Bitcoin is a very high priority for them. Also, this year, PayPal announced that users can now transfer funds in Bitcoin, which is really significant because PayPal is used by hundreds of millions of people around the world to move money. And it's also being increasingly used by merchants as a form of payment. So, to allow now forms of payment to include Bitcoin and for people to transfer funds via PayPal through Bitcoin will continue to strengthen the use of Bitcoin as a means of paying for goods and services. Below here, you see just a sampling of lots of major companies who now accept Bitcoin as a means of payment. I noticed this week on Twitter, there's a video circulating with McDonald's in Switzerland. that is now accepting Bitcoin as a means of payment. So it's just another example of how it's increasingly being adopted in this sense. Now, one of the vehicles that I think is really going to catapult its use as a means of paying for goods and services and transferring funds is a technology called the Lightning Network. And the Lightning Network allows anyone to send domestic or international payments of any size with unlimited frequency without bank intermediaries. It's nearly instantaneous and it's essentially free. So the Lightning Network is growing at a pretty aggressive rate. The 90-day average growth rate is 13%, an annual growth rate of around 48%. And just last week, Strike, which is a leader in a leading company advancing the use of the Lightning Network. Its CEO is Jack Mallers. For any of you out in the Bitcoin community, you're familiar with Jack Mallers as a big advocate of Bitcoin. But they recently raised $80 million in funding to advance Strike as a technology to use the Lightning Network. And I think it's technologies like Strike that will really advance the use of the Lightning Network as a means of paying for goods and services. So now that we've talked a little bit about Bitcoin in general and its use as a store of value and as a means of transferring and paying for goods and services, let's get into Bitcoin mining. So, what is Bitcoin mining? Well, the Bitcoin network is maintained and secured by miners, which are described as a distributed group of economically motivated actors. But miners are really fast computers that are designed specifically for the sole purpose of validating Bitcoin transactions. And it's the process of mining that keeps the network consensus, that ensures that all of the transactions that are recorded on the Bitcoin ledger are accurate and correct. So, what do Bitcoin miners actually do? Well, miners add new blocks of transactions to the ledgers every 10 minutes. So, every 10 minutes, there's a new batch of Bitcoin transactions. And in order to mine these transactions, these blocks of transactions, miners are competing to solve a very complex cryptographic puzzle. That's called proof of work. Now, every 10 minutes, the first miner to solve it gets awarded the Bitcoin. So that's how new Bitcoin is issued and entered into the marketplace. The first miner to solve this very complex cryptographic puzzle and validate this batch of transactions is awarded new Bitcoin. Right now, they're awarded 6.25 Bitcoin plus a small additional amount of Bitcoin in transaction fees. And as I mentioned, the number of new Bitcoin that gets awarded each 4 years is cut in half. That's called the halving event. So, why is mining important? Well, the miners facilitate the issuance of the new Bitcoin, as we talked about, and the miners are adding the new transactions to the Bitcoin ledger, the blockchain, and this gives the transactions a permanent order on the ledger. Once they go on the ledger, they stay on the ledger. The ledger can't be modified. There are hundreds of thousands, if not millions, of computers that have the same ledger around the world, verifying that the ledger is accurate and correct. And it's this permissionless nature of mining. There's no central Bitcoin board that says who can or can't mine. Anybody can mine. And so it's this permissionless nature that leads to a global distribution of miners. And that makes the network more secure and more robust from outages. So, for example, if you may recall, China at one point last year tried to ban Bitcoin mining. It really didn't impact the Bitcoin network and its security and robustness. And in fact, what happened was you saw more Bitcoin mining open up in other parts of the world, including in the United States. And it really kept the network secure and ongoing. So, briefly, how does the Bitcoin mining process work? Every 10 minutes, there's a new batch of transactions that are broadcast to the Bitcoin mining network. And then all of the Bitcoin miners, these super fast computers, compete to solve this very complex cryptographic puzzle. And then once a miner finds a solution, a new block is broadcasted and verified and added to the blockchain. And the winning miner is awarded their block subsidy, the new Bitcoin plus the transaction fees. And then after all of this, the whole cycle starts again, and a new batch is broadcasted out to the network, and the miners immediately work to solve that puzzle again. Now, what are some of the benefits of Bitcoin mining? So, Bitcoin mining, particularly with respect to our Cornerstone Investments Bitcoin mining fund, will distribute ongoing cash flow, just as if you were investing in a real estate syndication, for example. When you invest in the Bitcoin mining fund, you'll receive ongoing distributions. Here, we'll be making monthly distributions. And here, investors will have their choice. They can receive their distributions either in US dollars or they can receive their investments in Bitcoin. Now, there's also a significant tax benefit. As many of you may know, this is the last year of the 100% bonus depreciation. Next year, it goes down to 80% and 60%. But this year, we are taking advantage of the 100% bonus depreciation law. Business equipment is entitled to this 100% bonus depreciation. So we estimate about 55 to 75% of your investment dollars will be going towards purchasing the Bitcoin mining computers, which for tax purposes are treated as Bitcoin equipment. So about 55 to 75 of your percent of your investment will benefit from the depreciation tax write-off, and every investor will receive that in their K1 for 2022. Now, one of the big benefits of investing in Bitcoin through Bitcoin mining is that you're really getting Bitcoin at a significant discount. So, the average cost to mine Bitcoin is around 12,000 to 15,000 per Bitcoin. If you compare that to today's trading price of Bitcoin, today Bitcoin's trading at around $20,000. So you can see you're getting Bitcoin at a significant discount when you acquire Bitcoin through Bitcoin mining. Now, another way to look at acquiring Bitcoin through Bitcoin mining is your dollar cost averaging into Bitcoin. Now, mining is fairly stable. The cost to mine is fairly stable. The biggest cost is electricity. And with the Cornerstone Investments Bitcoin Mining Fund, we've locked in the cost of electricity at a very, very low cost under a power purchase agreement. So the main cost is the cost of electricity, and that's pretty stable. When you compare that to Bitcoin, it can be a very volatile commodity. On a daily basis, you could see 3, 4, 5% price swings in the value of Bitcoin. But when you're acquiring Bitcoin daily and monthly through mining, you're dollar cost averaging into owning Bitcoin. So regardless of whether the price is 30,000 or 100,000 or 500,000, every day we're generating more Bitcoin through the mining process, and every month you're receiving additional Bitcoin to your Bitcoin wallet. Or, as I mentioned, if you want us to transfer that in dollars, we can do that as well. So let's talk for a few minutes about our Bitcoin mining fund and some of the particular characteristics of our Bitcoin mining operation. So when you invest in our Bitcoin mining fund, you're investing in a Bitcoin mining operation at scale. We'll have a 1 megawatt Bitcoin mining operation. We're using the newest, most efficient Bitcoin mining computers called ASIC computers. We're getting them at a very, very competitive bulk rate. We're using state-of-the-art technology that all of the publicly traded Bitcoin mining companies are shifting towards. It's called immersion technology. And I'll talk a little bit about that, more about that in a few minutes. And as I mentioned, we're locking in a very low cost of electricity at just 4 cents per kilowatt hour under a long-term power purchase agreement. So I live in Los Angeles, and the cost of electricity for residents in Los Angeles is between 19 to 32 cents per kilowatt hour, depending on your amount of usage. So you can see, just as an example, 4 cents per kilowatt hour really is among the lowest in the country. So, as I mentioned, we're acquiring 108 Bitcoin mining machines, and we're getting them at a very, very low cost, both because we're acquiring them in bulk, but also because the price of Bitcoin mining computers tends to trail the price of Bitcoin. So, we're getting these computers at about 50 to 70% less than what these computers cost at the end of last year. Because the price of Bitcoin has come down, the price of the computers has come down. So that, combined with the fact that we're buying them in bulk, gives us the ability to purchase these at a significant discount. And the computers are the main capital expenditure cost. So the fact that our main capex cost is at a significant discount really helps with the overall returns that the fund is able to deliver. So we are using the latest state-of-the-art technology called immersion cooling. This photo on the right is an immersion tank, and it's filled with a non-conductive fluid, and we immerse the Bitcoin mining computers in this fluid. And the fluid is circulated through a radiator, kind of like a car engine circulates oil through a radiator to cool the oil, and then it goes back through the engine to cool the engine, and it continues on that circular loop. The same concept is applied here. We've got this non-conductive fluid cooling the Bitcoin mining machines, and then the fluid leaves these tanks, circles through a radiator, which cools the fluid, and then it cycles back into the tanks, and it keeps the machines much cooler. And this benefits us in a few significant ways. First of all, it keeps the machines much cleaner, so they operate much longer without breakdown, and their lifespan is much longer. It's about 50% longer than air-cooled machines. It reduces our operating costs. It reduces the downtime because we don't have to repair the machines nearly as much. And most significantly, because we're immersing them in this liquid that keeps them cooler, it gives us the ability to optimize the performance of the machine. So we can perform at a higher rate, which is called hash rate, and that gives us the ability to generate more Bitcoin per machine. So overall, it increases our profitability per machine by 30 to 50%. So as I mentioned, we're locking in a very low cost power purchase agreement. We've locked it in at 4 cents per kilowatt hour. And our hosting company, which is kind of like the company operating a data center, this is a company that's specifically operating our Bitcoin mining facility, both online and on site. They're able to monitor the performance of the machines and make sure that they're all operating at peak capacity. If there's a breakdown, their technicians go out there, and if they can fix the machine on site, they'll do that. If it requires shipping out, they handle shipping it out for repairs and then reinstalling it. So we have a very favorable hosting agreement with them. And then we also have a very favorable agreement with a pooling company. So let me briefly digress and talk about what pooling is. As I mentioned, and you may recall, every 10 minutes, only one computer, one Bitcoin mining computer, is awarded the 6.25% Bitcoin for being the first to solve that cryptographic puzzle to verify that batch of transactions. So every 10 minutes, just one Bitcoin mining computer solves that transaction and is awarded the Bitcoin. So the way we are able to smooth out those awards and ensure that we are earning Bitcoin every day, and this is common in the industry, is you join a pool with other Bitcoin miners. So you have lots of Bitcoin miners join forces into a pool, and we each share pro rata based off of the amount of energy called hash rate that we're contributing to the pool. So it's all equal based off of the power of our individual Bitcoin mining computers. And then that pool is earning Bitcoin each day, and it's all distributed evenly around the pool. Now, we're partnering with an industry leader in the pooling service called Luxor. They typically charge 2.5% of the Bitcoin that's being awarded as their fee for facilitating that pool. Now we've negotiated a 50% discount, so we're paying 1.25% for participating in that pool. So, what is the whole process in our fund for distributing Bitcoin that we generate? Well, the Bitcoin mining computers are plugged into the mining network, and they're validating the transactions and securing the blockchain, and we're awarded Bitcoin for that process. So every day, Luxor, our Bitcoin mining pool, will transfer mined Bitcoin to our fund's wallet, and then at the end of the month, we'll look at the wallet, we'll look at our expenses that we need to pay, which are primarily the ongoing cost of electricity and our agreement with our hosting company. We'll sell the Bitcoin necessary to pay our monthly fees, and then the rest is distributed. And so, for those investors who want to receive their monthly distributions in cash, we'll sell that Bitcoin, convert it to dollars, and transfer those funds to you in dollars. And for those who want to receive your distributions in Bitcoin, we'll send you your monthly distributions in Bitcoin. So, briefly, some of the key terms for our Bitcoin mining fund. It's projected to last actually 7 years. This is a typo here, but the Bitcoin mining fund is projected to last 7 years. As I mentioned, we'll be depreciating the cost of the machines over the first year, and we anticipate that being somewhere between 55 to 75% of your initial investment. You'll get a depreciation tax write-off on your K1. About so 90% of the profits will be distributed to the investors, and 10% of the profits will go to the general partners until the investors receive a full return of their initial capital. And we're projecting it will take less than 2.5 years for you to receive a full return of your initial capital through the monthly distributions. Once you've received a full return of your capital, then the split goes to a 70-30 split, with the investors receiving 70% of all the Bitcoin that's generated and the general partners receiving 30%. As I mentioned, distributions can be in either US dollars or in Bitcoin. The minimum investment is $50,000. All of the machines will be insured against damage or theft. And a couple of characteristics for this fund that we built in to make sure that it's a conservative approach to mining. There's zero debt involved, so there's no leverage in this. All of it's being funded through investments, and that we think makes this a much more secure investment. And each month we won't be having to pay a mortgage or a debt payment before making distributions to the investors. Now, the other conservative element we built into this fund is there will be $180,000 sitting in a reserve account. So, as I mentioned, every month we'll be first selling the Bitcoin to pay for our ongoing monthly expenses. And we estimate right now the price of Bitcoin can drop all the way down to 11,500, and we'll still be able to pay our monthly expenses with the Bitcoin that's being generated. But what happens if the price drops below 11,500? What happens if it drops to 10,000, for example? Well, we'll have this $180,000 sitting in the reserve account. So whatever we can't pay for with the Bitcoin generated, we'll tap into the reserve account. And then at the end of the fund, any amount that hasn't been spent will just be distributed back to the investors when we close out the fund. So that's the presentation. And if anybody's interested, I've got my contact information here. I can be reached at zw@cinvcre.com, or you can also call me at my office. My number is 818-510-3339. And thanks for listening to the presentation, and I'm happy to answer any additional questions that you might have.
All right. Awesome. Thank you so much, Zach, for taking the time to, speak with our viewers and our audience. That was great content on, what's going on in the, Bitcoin mining and just cryptocurrency in general. You definitely help people understand how it works. So we're going to open it up to Q&A. Anyone, if you have questions, you're listening, go ahead and type those in the chat, and I'll go ahead and read those off to Zach. So I have some questions myself.
Sure.
So we've seen some fluctuations in the market right now with the way the economy is performing. Like, what do you predict in the next 5 years how Bitcoin's going to perform?
Yeah, it's a great question. So, historically, the price of Bitcoin has a new bull run after the halving event. So, as you recall, I talked about these halving events where the amount of Bitcoin that's being generated every 10 years is cut in half. And we
Hmm.
also talked a little bit about the increasing interest in Bitcoin and demand for Bitcoin. For example, BlackRock and Fidelity recently announcing they're opening up their investments to include Bitcoin. And combined, they have $14 trillion in assets under management. So, what we're seeing is every year there's more and more demand for Bitcoin. The demand's growing institutionally and individually. And we're also seeing, as we talked about, it's got a very limited supply. And every 4 years, that supply is cut in half. So if you look historically, when these halving events have occurred, each of the past three times, it's been followed by a significant bull run.
Hmm.
So right now, Bitcoin's been consolidating for this is the fifth month it's been consolidating. It dropped down to a low of about 17,500, and it's been in a trading range to up to about 22,000. Today, it's a little over 22,000, but it's been consolidating and basing here. We're now in the fifth month. What I think is that sometime in the fourth quarter or in the first quarter, we'll start to see a significant move up back to its prior high. And then if it follows what it's historically done, after the halving event in 2024, we'll enter into another bull market. So we've looked at how far we think these miners will continue to operate, and we think pretty confidently we'll get through two halving events and two bull runs that follow those halving events. And so that's why we've timed this out to a 7-year fund to get us
Okay,
through two bull cycles.
interesting. Okay, I have a online viewer watching from YouTube, and the question is, what is the minimum buy-in for the fund?
The minimum buy-in is $50,000.
Okay. If somebody has, say, IRA cash and maybe not enough for the 50, can they also use their own personal cash?
Yes, we have a couple of investors that have chosen to combine some IRA funds and some non-IRA funds, and that's perfectly fine.
Awesome. What if it's like two investors, like a couple? Would they have to create, an entity to be able to use both of their, maybe IRAs to add up to the
No,
fifty
no, if
thousand?
it's a couple, that's fine. We can combine it,
Okay.
and so just depending on their marital status, we may have to have two separate subscription agreements so that they both have their individual amounts, if that's necessary. But that would be fine as well.
Okay. Also, is it limited to accredited investors only?
No, this is a 506B offering, so we're taking both accredited and up to 35 sophisticated investors, and we still have plenty of room for sophisticated. I think today we only have four sophisticated investors.
All right. That's always good news. I love 506Bs for that reason.
Yeah.
Okay. Any advice to people that are doing research right now on, putting their money into crypto, and is now a good time to do that?
I think, well, personally, I think it's a great time to do it. And historically, the time to get into Bitcoin mining is when you're in kind of this bear market because you're getting in at a very good price.
Hmm.
So for us, as I mentioned, we bought these machines at an incredible discount, and so that's our main capital expenditure cost. So from that standpoint, I think it's a great time to get in. I will say though that if you're interested in this particular fund, we're close to maximizing it out. We just have a couple of spots left. So if anybody is interested, please reach out sooner rather than later.
All right. Perfect. Well, I don't see any other additional questions, so we're going to wrap it up. Zach, thanks again. I really appreciate you spending time with us, like I said, and we'll have to bring you back again for a follow up workshop with us.
Yeah, I'd be happy to. Thank you. I really appreciate it.
All right. So, anyone interested in learning more about self directed IRAs and how you can use your IRA to invest in alternative assets like Bitcoin or real estate or private notes, things like that, you want to email me. You can email me at IRA specialists at NuViewTrust.com. Me or someone on my team will reach out to you as soon as we get that email, set up an appointment, have a consultation with you, and then we'll, go ahead and help you get that account set up, funded, and then into whatever investment vehicle that you're looking to put your money in. And you can stay up to date with us on all of our live events, our workshops, podcasts by scanning this QR code. You can follow us on Facebook, YouTube, and LinkedIn as well. We post lots of content there. I appreciate everyone joining us, and we will see you next Wednesday at 1 p.m. Have a wonderful rest of your